We need to talk about the one and only Mr. Ken McElroy and what he is putting out and why I agree 1000%. We're going to talk about a video that Taylor from Life Goal Investments put out that we're actually going to debate this morning, which I look forward to. Talk about what's going on in the Hamptons, and finally, the economic calendar for the week, because it may not be full of inflation and other things, but there's a lot of stuff going on this week that I think will tell us what is going on with the economy. So let's talk about the one and only Mr. Ken McElroy. Ken McElroy is an amazing investor. I believe he's an amazing educator. I follow Ken McElroy. Obviously, if you've been watching my channel for a couple of years, I went head to head with Ken McElroy when he made a call on the U.S. housing market going down 40%. Obviously, I disagreed. Obviously, I said in that video, Ken is an apartment investor, multifamily investor. He had probably not looked at single family homes in over a decade. So again, I thought Ken was playing in waters he was not prepared for. And I declared he was wrong. And, history kind of shows who was right and wrong in that decision. That said, Ken McElroy is clearly talking about areas of the investing landscape he is experienced in. Ken McElroy has done an amazing job kind of over the last 8 to 10 weeks. Talk about the pain building in commercial and multifamily. Some things that I've heard Ken McElroy talk about is the pain coming to limited partners. He is seen talking about the pain in bridge debt. He is seeing the values fall. He is seeing transactions. These are the things that I will be following Ken McElroy for, because again, he undoubtedly, without question, is looking at deals daily. He is dealing with a portfolio that is probably full of value add and probably has some bridge debt. So he is in the mix. I will certainly be turning into Ken McElroy probably weekly as we move forward, because I think Ken will be sharing far more in the trenches. And again, this is where Ken thrives. This is Ken's superpower. When Ken tried to come over and play in single family, it was probably not a good look. I don't think he would do that again. Let's talk about Taylor from Life Goal Investments. I ranted about this. I don't do this very often, but I ranted on Saturday. Taylor from Life Goal Investments put out on Instagram and probably on TikTok, but I don't play with TikTok. Instagram's where I saw this. He was annoyed with the idea that you make wealth in a recession. He's annoyed by that. So we're going to unpack that a little bit today. I look forward to the conversation. Myself, having gone through several recessions, can tell you that at least in real estate, that is when you do make hay. Frankly, you can go back to the S&L crisis and look up Sam Zell. If you don't know who Sam Zell is, do yourself a favor today. Look up a nickname called the Grave Dancer. That was the nickname that Sam Zell, I don't know if he gave himself. I'm sure he didn't give himself. Probably Fortune or Forbes or someone gave it to him in an article. But basically, he struck while everybody was scared and built an amazing portfolio and frankly became a billionaire because of the S&L crisis. So check that out. Folks, you remember on this channel, we talked about the white-collar recession, and we are seeing probably some significant indications of that. Obviously, the Hamptons. The Hamptons is obviously the place for the elite, but it looks like the Hamptons is having a tough time filling up summer rentals. Yes, the rich Wall Street folks, the 1% in Wall Street are not shopping in the Hamptons for their summer vacation. Inventory has doubled and prices are down 10 to 20%. If the 1%, if the white collar are nervous, they are not going to the Hamptons. That is very clear. Fed Barkin was talking about on Saturday, or at least that's when I read it, about more rate hikes coming. He is open to the idea. I fully expect Fed presidents to say that, but let's be clear. I think they're done. The Fed needs to hold the rope. They don't want to tell the market they're done or paused because they want to have, the ability to raise if something crazy happens. But again, I think they are done. And I expect the Fed to talk about raising rates. It's kind of a no-brainer, in my opinion. Commercial lending is tanking. Last quarterly reading had CMBS issuance at the lowest since 2010. I was buying back in 2010 in commercial, and it was wild to see what was going on. Consumer sentiment fell from 63 down to 57. What is interesting about this reading is, again, not the numbers, the trend. You and I are watching the trend when we talk about consumer sentiment, and it is negative. 5-year inflation rose. That is concerning. That definitely will catch the Fed's attention. 5-year inflation rose to 3.2%. Don't know if you saw this, but it looks like student loans, brand new student loans are getting a rate of 5.5%. Yes, folks, debt is getting expensive across the landscape. Credit cards, 30-year mortgages, and now student debt. So let's talk about the earnings and kind of economic events that we get to look forward to. It starts really big tomorrow, Tuesday, with retail sales. Retail sales are expected to be up, I think 0.8% month on month. So that's going to be very interesting to look at. Jerome Powell speaks on Friday. That will be must-see TV, or at least for me, must-read transcript. Tuesday, we get Home Depot. Wednesday, Target, TJX, and Cisco. Thursday, we get Walmart, Applied Materials, and Friday, we get Foot Locker and Deere. Lots of things going on in the market, lots of things to pay attention to do. This week for me is about retail sales. What is going on with the consumer? Are people trading down to Walmart from Target? These are things I will be looking for. We will get Home Depot data. What is going on with kind of the modifications and remodels and things of that nature in housing? Lots of exciting stuff this week. And of course, we get existing home sales. I think that is on Thursday. I don't remember exactly. It might be Wednesday. I think it's Thursday. Again, I think expectations are 4.3. I think that's a pretty good number. That's, a lot of times I disagree with the number. I think 4.3 is good. I am taking the under slightly. I think at 4.28, 4.27. So again, folks, thank you for being a part of this. Again, this is your daily financial news for Saturday. Take care. Bye-bye.